So if you guys are viewing this right now, we are just trying to check things out to make sure that everything is running smoothly, because these live productions, especially when you're doing it yourself, is not always the easiest thing to do. So let me get this countdown timer rolling here. So we got, all right, so we're just gonna let this build up for just a little bit. All right, here we go. All right, got the 5-minute countdown timer rolling. So I don't know, Josh or John, can you see if we're live streaming, if things look good now?
Yeah, just one
I'm
second
trying
here.
to check this out as well. Yeah, looks like we got 23 people watching on the WorldAlternativeMedia channel. And yeah, like I mentioned, we're just letting this build up for a few minutes. John and I just logged on like 2 seconds before, so we haven't done any like prep or anything. But what we are going to
We
talk
are
about today.
live.
Yep, we are live. But just a few housekeeping things before we get going. I do have a link that you guys should see underneath the screen for a copy of my free ebook called "How It's Rigged: The Economy," where I go over. It's for free, and the only thing I ask is if you guys text it in, then what I'm going to do is when we go live, occasionally I'll send links that we're going live. And actually, today was the first time I did it after collecting people's numbers for like 2 years. So I'm not spamming people like crazy. So in that book, we talk about how they rig the inflation data, the unemployment numbers, the GDP data, and just goes on and on and on. It's only I think 18 pages long, but it's really hard hitting. It's for free, and so just really trying to exchange value to you guys. And also, you can catch us live on the LibertyAdvisorshow.com, where you can actually see all the various places where we are live right now, because it is we're not necessarily guaranteed to be here next year. I mean, YouTube or Daytube, as I like to call it, constantly trying to kick people off these platforms. And so if you guys actually want to check out my YouTube channel, I do have like in the cover photo, I've got links to BitChute, Float, DLive, even my Instagram page, and of course we have Wham's page as well. So just different ways, because sometimes what happens is John and I want to go live, but it's going to affect an algorithm change, and so it's just another way to get the information out there. Because today we do have a lot of very interesting things to talk about, and the timer says we still have another 3 minutes. So also want to make sure you guys make sure that right now Josh is going through a hard time with all of the demonetization that's been going on. We've got longer term plans for that, but in the short run, basically he's putting in tons of hours, and basically making like a McDonald's type wage from YouTube. And people are under the impression that you're making hundreds of thousands of dollars as a YouTuber, even if you're getting millions of views, minutes of views per month, but it's not the case. I mean, even our last live stream, which we talked about nothing controversial, even that got demonetized. And then I'm talking about the one that John and I did, which was, we didn't talk about anything crazy or any 9/11 stuff or swear or anything like that, which is hard
But
to
we
do.
talked about the Fed.
Yeah, I guess we did. Yeah, I guess there probably is a spot with the Fed, and I do see. Yeah, it says John is much louder than the other guy. I'm not really sure what is going on right now with my Zoom and why it's not having me go louder. So I'm trying to
How
fiddle
about
around with
this?
this.
How about this, Tim? Let me talk here. Hello, hello, hello. Am I getting weaker or louder? Hello,
Well, you're
hello.
you're good. It's me, and I'm the one that has the weak audio coming in, even though I've got the control board and trying to
All
do
right.
everything to control
Okay.
this. But yeah, some of the things we are going to talk about. We had the Fed, who basically 3 days in a row is injecting anywhere from like 50 to 80 billion dollars into the overnight repo market, and we're going to get into that. Also going to get into the Federal Reserve cutting rates and what that means, because this is one of these signs that I thought was going to be the sign of things to come, and really kind of jump things off, is when the Fed loses control of the interest rate markets, and that's exactly what we're seeing right now. And what we will do is we also will take some questions too at the end. We're still letting this build up we got another minute and 6 seconds. And I don't know if can you guys comment? Can you actually see FedTube? Yeah, I do like that. Can you guys see uh, the countdown timer in there? Because I'm testing something out. Maybe actually, I could probably go in here and check. See if this cool. Is, what we can see that. So very cool. Yeah. So the last thing I will say is that if you guys do text that number, it has to be World Alternative Media, all one word, without spaces, for it to work, and then it will then send you a link to my ebook. I think it should work for America and Canada. I'm not sure if you're coming to us from overseas, if that's gonna work. But you can go to my website and get the book there too. But yeah, we are coming up now with another 20 seconds left till we're going to kick things off. And yeah, we've got a lot of stuff to talk about today. Wanted to do this actually yesterday. Okay, sounds like your mic isn't coming in from that mic in front of you. You know what? Maybe that is the problem. Let me, all right. So next time, John.
Yeah, let's see.
Actually, here. You know what? You know what? I see exactly what. How about now? Can you guys
hear me better now? Is that my levels looking better now? I think I just it was coming in from my Yeti mic, but I'm not even using my Yeti mic, so I think that's what's okay. All right, so we are gonna get this not anymore. Your audio is actually a bit louder for me. Okay. Hopefully we're going good now. But yeah, I do appreciate you guys sticking with us as we are getting things rolling here. So, okay, let me find where I had a little intro here. Okay. Everyone, this is Tim Picciott, joined with, of course, the one and only John Sneisen of The Economic Truth. And today we've got a lot of great things to talk about. I don't know if it's great things, but we've got a lot of important things to talk about. One of them being that the Federal Reserve is basically losing control of the interest rate situation. So what was going on is that banks were charging each other 10% annualized to lend money to themselves overnight, which is, absolutely crazy. We're going to get more into that later on. Also, going to get into the fact that the Federal Reserve had to cut interest rates again today, which we no surprise to anybody. And they also said that they're expecting not to have to cut rates either the rest of this year or next year. And I'm going to call fake news and say about a 0.01% chance of that actually being true. And we're going to get into also, different ways that you guys can help protect your retirement accounts, and not just gold and silver. There are some other things that you guys can do. And then you're going to get into some of the goodies from the press conference. I wasn't able to listen to all of it. I was doing some other work and reading through it, but did, get some pretty good gold nuggets from that. But first I want to kick it over to John and see what his thoughts are when it comes to all this repo madness that is going on in the financial markets, and see what he thinks about that. So John, take it away.
Yeah, no, I was listening to, of course, Jerome Powell at his live speech today, and they're trying to mitigate their risk by saying that they're constantly watching the economy, but they don't see anything that's a problem at all. But meanwhile, we've got to remember back in December, I don't know if anybody remember that call that Mr. Steve Mnuchin had with all the top bankers when he was speaking with them about that there were no liquidity crisis, apparently. But now we're seeing a liquidity crisis in the money markets, and it's not a good thing. It doesn't look good, doesn't it, Tim? And what we're seeing right now is a big problem with the Fed. It seems like they're literally losing control here. And when they are losing control of the economy, they're just shoved in. How much was it, Tim? There was it was 75 billion, and then there was what yesterday?
I believe it was like around 50-ish yesterday, and then 75. I'm going to try to fix my mic, so I'll let you take it over.
Yeah, so that's $125 billion that you're looking at in new stimulus into the money markets to keep them afloat. And this is the first time the Fed has actually intervened since the money market crisis. And what is also interesting at the time is there's a unknown fund that me and Josh and Rob Kirby and others have actually talked about it and exposed it, which is called the Exchange Stabilization Fund. Remember how they were blaming the Chinese to manipulate their currency? Meanwhile, they have their own Exchange Stabilization Fund, which actually, if you go and search it up, it tells you exactly what it's used for, and it's used to keep the currency stable. Of course, that's what it is. But the Exchange Stabilization Fund, back in the 2008 crisis, if you go and look at their auditable statement that I did for our, you could go and look it up. It's a huge expose on the whole Exchange Stabilization Fund and exposing, the secrets behind it. In 2008, they actually had a massive credit line, the ESF as well, out to the money markets to try to stabilize the money markets. And what you're seeing now currently is, who knows, maybe the ESF is back in the game, and they have reopen that credit line that they had, to stabilize the markets. And of course, we got to remember that with this comes, a lot of questions, and there was some questions, but there wasn't any real good questions, because the mainstream media was at the press conference that Jerome Powell held, and they were just asking dumb questions like, how can we talking about the corporate debt, the student loan debt, the credit card debt. It's not only the United States; it's debt all across the world. The ECB just reopened their purchase program. Some of the first people, actually, Tim, we covered how the Fed actually has increased its balance sheet again. And that have happened, and now, of course, the current balance sheet is back up to, as of August. This is August 14th, so it's not completely current numbers, but that is at $3.744 trillion. So you're seeing that the Fed is getting back into mode of printing a lot more money, and this time, you printed, the balance sheet increased from about 800 something up to 4.4 trillion. What is it going to take this time, to keep the bubble afloat? Is it going to be looking like, if we were to use that logic, you would have to increase the balance sheet, to maybe 40, close to $40 trillion, and think about all the currency that needs to be printed for that, and maybe you'll get the markets. It doesn't seem like they're doing too much though, Tim. This is the interesting thing. You're seeing the Fed is cutting the interest rates. They're going and intervening in overnight lending, because overnight lending got out of hand, and it was showing signs of a liquidity crisis that doesn't exist, according to Steve Mnuchin. But I think there's something there, that all this printing money, no matter how much you printed, it doesn't seem like it's that liquid to move around in the system. And of course, with the bankers, struggling to lend money to people as debt is oversaturated in the markets, I think we're in for a dangerous cocktail here. And not to, of course, mention I was talking about the corporate debt that of course the ECB is buying lots of. What about the collateralized loan obligation derivatives that's laying on top of that? And what about the credit default swaps? That still is being used. I just recently watched again with my dad. My dad was over here for the first time in like 10 years. The first time I've seen him in 10 years over in Canada. So, but we had a lot of discussions about the money and the economy, and we watched, of course, The Big Short together. And then again comes the questions. Are we there? Is this going down right now? As we've seen those tremors that didn't happen since 10 years ago, a little over 10 years ago now, when the Fed actually had to intervene heavily in the money markets to save the global economy, as the liquidity just dried completely up, Tim. Yeah, that's okay. Let me just go into here and look at some of our questions that we have here. Guys, let's see what you guys are up to here. Holy smokes, there's a lot of and thanks again, Rainy Steps, as last time you donated. Really appreciate your super chat there. Let me just go in and take a look here. There's lots of chatter. Of course, everybody's saying end the Fed, which I totally agree with. It's a communist entity that's not really doing anything good. It's just let's see. Yeah, somebody's saying you should YouTube the creature from Jekyll Island. Of course, you definitely need to YouTube that and buy the book for of the creation from Jekyll and really understanding how the Fed got created. And of course, Jim Griffin is a good friend of mine. I work with him on the Leadership Council of Freedom Force, and you should check out Freedom Force as well, because that's a great group of people that are trying to work really hard in our local communities to change things and expose and educate people about all these things, and also heavily promote true individualism, actually people being free individuals. So let me go down here and check what else is up. I'm just looking at some questions here. Let's see what we got here. Let's see here. Johnson's good now. Okay, let's see here. Go back. Just trying to see. Okay. Okay, we still got just sound that's coming out there. That's an issue, Tim. And it says no sound. I'm leaving. Yeah, so I don't know. Can people hear me? Can people hear John? I know that I was talking there for a while. Let's see here. Not hearing Tim at all, and John's audio goes in and out. Oh, okay. Okay, I see. So, yeah. So we're but again, we're talking about the Fed. Decided to cut the interest rates, and of course, I went into great detail about explaining how they now are intervening in money markets to try to save the economy. And the overnight repo rate is basically where everybody's lending money on a very extremely short-term basis, and that just got out of hand. I think Tim went all the way up to about 10% or something, I believe, right? Yeah. Yeah. So Tim is saying 10% that it went up to the overnight repo rate, and that versus the current 2% it's pretty crazy. It's pretty insane that they had up to 10%, and it seemed like it was going to actually come to a massive liquidity squeeze. Of course, the Federal Reserve comes in and prints a whole bunch of money, 125 billion dollars worth of money, trying to save the whole economy here. That's basically what they went in and did. They trying to save the corporations, the banksters, that are doing overnight lending in order to keep the economy afloat. But that just shows you how vulnerable the economy is, as you see the issues that you're getting with those short squeezes that could happen, and those out of hand movements that we just had, and it's really interesting how the Fed seems to really having an issue, really starting to lose the control of the economy, and that is pretty interesting to see. So listening to of course what's his name, Powell's speech, it's pretty laughable. It's just basically like Ben Bernanke all over again, coming out and saying that, oh yeah, everything is wonderful, there's no problem in the economy at all, we're doing great, and we're not seeing any issues. Of course, that's I think there's some issues there. That's just my opinion. Of course, I'm not a PhD in economics like these guys over there at the Fed, but I think I have a little bit of a thought that there might be some issues here that we're seeing, especially with the underlying debt problem that's in the corporate sector in the United States. And with now, of course, it was the FedEx today had some serious issues in their stock. They had a drop of 30 a drop of 13% today in their stock. So they were seeing some supply issues around the world, and as you see, it's not just the United States, but it's global growth that are substantially slowing down in the world economy. And with the global growth slowing down, you're really seeing this whole debt bubble come into fruition, because when debt is not accumulating at a certain pace, to keep up with the 2% inflation, and okay, Tim, it says that my audio is off now. Okay. Yeah. So, but what we're seeing is a serious issue in the global fiat currency economy here. You're seeing nations like there's nations like, of course, in Argentina. You're looking at, of course, we talked about how the U.S. now is, and Trump was talking about doing, 50 to 100-year bonds. Same with Argentina. These are not doing very good, and of course, with all these issues, and of course having some of the top people coming out in the whole economy, with the hedge fund owners out there. You got some serious guys talking that maybe you should look at gold as a wealth insurance and investing in it. Well, they say investing in it. They don't talk too much about the wealth insurance aspect that you need, and we need to seriously get and look at what's happening in the economy.
Even guys like Ray Dalio were talking about that. And I think I finally fixed what the problem was. I had 2 mics selected before, and then I had no mic. So if you guys can leave something in the comments if you can hear me. It looks like it's coming through on my end, so I greatly apologize. And we're going live to several different places. So, I mean, if you were just to go live to YouTube, not a big deal at all. I mean, anyone can figure that out. But if you're trying to go live to Float, I've got 2 different YouTube channels, to a Facebook group, Periscope, Twitter, all these different places at once. It makes things substantially harder, and do apologize, but there's really no way to, when John isn't on, I'm testing it and it works fine on my end, and then as soon as he comes on, then all of a sudden, Wirecast changes stuff. So yeah, I mean, anyone can go live just to YouTube, but we're trying to go to different channels. I mean, so people always want to complain about, we need to get off YouTube, but then, Josh has like 300 people following him on BitChute, and I've got like 45 on BitChute, and people aren't willing to go there. So I'm one of the few people that's trying to stream to all these places. So I do apologize, but taking action and being one of the early people doing this stuff, it's not easy. So I do apologize. But yeah, that quote from Cramer was, FedEx holds most dispiriting call about the economy I've heard in a very long time. And so that's coming from Jim Cramer, who's basically a perma bull, always optimistic. But one of the major things, so one of the shows that I've been on recently was Free Talk Live. It's the first show in America to start talking about, or probably in the world, to start talking about Bitcoin back when it was worth pennies. I mean, that's how Roger Ver found out about Bitcoin, was through this show. And when they had me on in February of 2018, I said that I was at Acapulco to help try to talk about the ongoing financial collapse. And Ian, the host, said, what do you mean by that? Or what's going to be one of the triggers? And I go, one of the triggers, the very first thing I said was, it's when the Fed loses control of interest rates. And ultimately, they should lose control. You should have market dictating rates. So I'm not advocating there should be a Federal Reserve. And when John was plugging The Creature from Jekyll Island, I was trying to say, and if you guys do, get a book and you guys ship it to G. Edward Griffin and pay for shipping and handling, or go see him at one of the many conferences he's at, which is what I did, you can get your book book signs. So I would definitely take advantage of that. But I digress a little bit. But what we saw with the Fed losing control of the interest rates, if they can set a Fed funds rate of 1.75 to 2%, which they just did. But if the market says we are only going to accept X, or if you're a bank and you're like, well, hey, I'm not going to lend to Deutsche Bank because Deutsche, allegedly, if they need a bunch of money, then you're not going to get it at any cost. And now some of the factors that they were trying to say caused this were things like it's end of the quarter, and so companies have big tax receipts. Well, I mean, everybody knows that's coming up. I mean, that shouldn't be a big surprise to anybody. I mean, another theory could be that there was several banks or institutions or funds that were on the wrong side of the oil trade, and so all of a sudden, Monday night or Sunday night, oil goes up 20%, and if you were short oil or had the you're selling different contracts, and all of a sudden, your position blew up and you're in need of money. If you have to have a certain reserve requirement, whatever money you can get it at is the cheapest amount. And so if you need to have this and you've got to go up to 10%, you're only doing that for desperation. So it's amazing that banks will lend out money for 30 years or the government will lend out money 30 years for, basically nothing. But yet, when it comes to lending money overnight, they're at one point got up over 10%. And so it just shows what a fragile and broken system this is. But what this ultimately means is that now the Federal Reserve, this is only, the first salvo in many. That next step is going to be, printing more money. I believe Jerome Powell did even hint at that. And I think his quote, very Orwellian. Of course, he doesn't come out and just say we're going to print more money. But what he says is, and this is a quote, "It is certainly possible that we'll need to resume the organic growth of the balance sheet sooner than we thought."
Organic
growth. Like, me pressing a bunch of buttons on my keyboard is somehow making this organic growth. I mean, it's just such a...
Hey, Tim, sorry to interrupt you, but organic growth for the Fed is like talking about selling, organic food to you, and which is laden with pesticide. That's what organic growth is to me. What the Fed is talking about.
Jeffrey Epstein was organically getting, 12-year-olds to massage him, or just organically. I don't know how it was happening. Another funny, there was a ticker at the bottom of CNBC, and this is on Zero Hedge, where it goes, Powell, funding pressures have no implication on monetary policy stance. I mean, what is he smoking there? That you have, maybe he's not smoking, a vape anymore because, you're not allowed to do that. And, he's probably up there in Washington or New York, nanny state. But, he's trying to say that that funding pressures don't affect monetary policy. I mean, is this like some sort of joke? And I didn't get to listen to I only got this tiny bit of the press conference, like probably 5% of it. So I don't know, if anybody else called him out on that. I doubt they did. But this is the opening shot of what is going to happen. And I can't even believe we even got to the point where, let's back things up to last year around this time, or it was like October 3rd of last year or 4th. You had Jerome Powell said we're on autopilot. We're going to keep having $50 billion a month going off our balance sheet. And I was out here on several podcasts, several. I've got, if you guys head to my YouTube channel, I've got I'm spoofing Peter Schiff, and I made a Tim Picciott was right video with all the proof of different things that I've talked about, which is, crazy ridiculous of some of the things that I've said that have come true. And when it comes to the Federal Reserve, I'm like, how are we going to finance a $1.2 trillion deficit, which is, going to be $100 billion a month? Plus you're going to have, another $50 billion a month coming from the Fed. So what, $150 billion in treasury bills in the best case scenario. That doesn't even count things like, the budget doesn't even count things like hurricanes or other stuff that happens every year. I mean, it's just, that's off balance sheet items. And so I'm like, so now we go from the standpoint of we're going to sell $50 billion a month to now we're going to inject $70 billion overnight. I mean, at that, can we take a victory lap on this? That, that we were calling this absolutely correct. And they go, complete opposite. I mean, not only they can't even get away with not even selling money, they're selling bonds, and now they've got to inject $70 billion overnight. Excuse me, but it's just absolutely insane, the trajectory of where things are going. And this is in the boom times. This is in the best economy in the history of the world, supposedly. And, obviously, people that are watching this right now know that that's BS, know that that is the case. And so what I'm thinking is the rates are going to be going back down to zero. Eventually, they're going to be underneath zero. And then, which, I think actually Trump had a tweet today that said something like, what a weak press conference by the Fed, clueless, they lack vision, they lack communication. Well, guess what? Donald Trump, you're the one that put him there in power. And the day he did, I came out with a podcast saying that he was probably one of the worst people you could have put in there. And why are you listening to people like Steve Mnuchin, former Goldman Sachs, and why are you listening to Gary Cohn, who's a big carbon tax Hillary supporter, who is one of your top he was the top economic advisor. So it's just absolutely crazy, the stuff that's going on. I mean, it's like, I know I sound like a broken record saying things are absolutely crazy, but the fact that, you have the overnight lending rate got up to 10%, and then it's basically 3 nights in a row. I mean, and this is, absent what if the Fed didn't step in, where would things go? I mean, this could be another Lehman type event. So what I think is going to happen now is you're going to see Donald Trump probably starting more trade war tensions to then, F things up more, to then force some sort of event to then justify having more quantitative easing. But what I will point out that you also have, about a week or two ago, you had the Fed's balance sheets actually increase. So, I didn't hear any announcement of quantitative easing yet. You had the balance sheet increasing, which is, I think very important to note. And one thing that John and I did not get to talk about a couple weeks ago because we ran out of time, I just want to, get that out there now, is that the former New York Fed head, I believe it's Bill Dudley, actually, wrote an op-ed talking about how the New York Fed and the Fed needs to basically sabotage Trump and not do anything to help him out. So the fact that they are like forced to do this hand, they don't want to do this. I mean, they're being forced to do this. And I mean, that's something else that I saw a mile away. But for those of you who don't know, the New York Fed is the most powerful Fed branch. They basically run the show. And I'm not looking at any notes here right now, but I believe, what is there? Is there 4 rotating members of the FOMC plus the New York Fed, or does the New York Fed make it 4? But either way, it's 4 or 5. New York Fed has a permanent seat on there, and basically who's ever at the helm of the New York Fed is basically the real guy running the show, not Jerome Powell, not Ben Bernanke. They're the real shadow puppet master, who's taking Wall Street's orders, which during the financial collapse, which we actually are pretty much, this is the anniversary of the financial collapse, was 3 days ago. So that happened 11 years ago when Lehman Brothers went down. I know because it was my first
interesting thing how it just started to inject money right after the anniversary. It's almost kind of hilarious.
Happy anniversary! I got you $75 billion.
Yeah, exactly. You gotta give some to the bankers to remind them how great of scammers they are, Tim. What's funny? We got talking into negative interest rates here, and there's somebody that mentioned somebody needs to make a video explaining the logic of negative interest rates. Well, actually, there is zero logic, as he kind of says himself, Biddletube. But what's interesting though is I actually predicted negative interest rates, and I saw that negative interest rates were happening. Actually, my book here, The End of Freedom: How Our Monetary System Enslaves Us, that came out in 2015. Let me just say a little bit about here that what I said here. John is passionate about teaching people about how monetary system is deemed to fail and how we can protect ourselves from the certain failure. He predicted the quantitative easing from central banks around the world that will create eventually deflation. But he also is seeing that in a panic, this might also cause a hyperinflation by the programs that they have. He also predicted the move by Switzerland, Denmark, Sweden with negative interest rates, and the many rate cuts that will pursue. Because like here, actually, I talk about the future, many rate cuts that will pursue around the world, and not interest rate hikes, as many experts have been calling for. So actually, this is my 2015 book where I've been saying exactly what has happened now. And you're seeing that this is very predictable because of course, first of all, they've written papers upon calling for negative interest rates, not 0.65 or 0.1% or whatever they have different central banks. No, they're calling for -4, -5%, but they also need a cashless society in order to pull that off. Because if we went to -3 or 4% or 5% now, everybody would pull their money out of the banks, their physical money, and then when they pull the physical money out, as I've shown with my cash to deposit ratios, that's a serious issue. That there's the cash to deposit ratio is next to nothing in most of the banks worldwide that I looked at. and I looked at all the biggest ones, and then also the Canadian banks are just terrible. And they believe that they're just going to inject $150 billion in 2 days, $125 billion in 2 days, in just 2 days. Let that sink in a little bit, because nothing like that ever happened back in 2008. There was a $2 billion line of credit from the Exchange Stabilization Fund at the time. And now you're seeing, a massive injection of $125 billion. But that's what happens with money printing. With money printing, you just have a lot more money, slushing around into the economy. And of course, the problem with this and what they're seeing is, and what Jerome Powell said in his speech today, Tim, is, they're looking at, increasing asset prices. That's their number one target, of course. And that is, floating more debt into the system, lowering interest rates so more people can get indebted to keep this Ponzi scheme alive. Because what a lot of people have said, and this brings me to my second book, Canada, the Greatest Economy in the World, ? They've been saying that, the banks in Canada has, really thrived. I listened to, I forgot, there was some kind of I think it was an economist somewhere that said, they actually tail all the growth in Canada to all the immigration that are happening. And that is correct, because what they've used many of the immigrants to, they are, heavily pushing to indebt them to keep this Ponzi scheme alive here in Canada. And of course, this is just the perpetuation of what's been going on, with central banks around the world. They increased from 2008 to 2018, Tim. On an average, I looked at the 72 biggest central banks. There was 333% that they increased their balance sheet by. And by increasing the balance sheet, I mean they bought up all the bad debt around the world. They bought up, mortgage-backed securities, which is not really debt. It's just a instrument that is, derives off of the debt of an asset that is underlying, a corporation called special purpose vehicle. So you're just seeing like all of this money has, it's just been slushing around. And of course, it becomes a big problem worldwide when you see all of these, mechanisms. They're just calling for, they need more inflation, they need more debt. And of course, what we got to remember, this deflation that is happening now in the economy, that is, the ultimate nightmare of the Federal Reserve. And as, Jerome Powell said, if the time comes, we'll put out anything, any of our, policies or that we had or that is new in order to save the economy. So that is what they're saying here. So meanwhile, he's saying that everything is completely fine, but he's also saying that they're willing to, use all the ammunition available from the central bank to try to manipulate the economy back up again, as it's, slowing down severely here.
Yeah, it makes me think of like the Lego songs, like everything is awesome, everything is cool, and you're part of the team. But obviously, I can't really carry a tune. But another book I'd recommend would be Harry Dent's The Demographic Cliff. I don't, obviously don't agree with like everything he says, but what it talks about in the book is that you have the demographic issues that are going on. I believe the baby boom was from 1946 to 1964. Yeah,
it's a massive point. Yeah, it's a very good point, by the way.
The average person in their lifetime spends the most amount of money at age 46. Age 46, if you then, look at the baby boom, they would have reached their peak spending in 2008, and then look what happened. And then the other thing you had in 2008 is you had the oldest baby boomers were just starting to turn. The oldest ones, the ones who were born in 46, were just starting to turn 62 years old, so they weren't actively pulling their money out of these pension funds, out of their 401ks or their IRAs. Well, now it's 11 years later, and now let's say the oldest ones are now 73, and most of the baby boomers are now of retirement age if they can afford to retire. And what is going on is that they realize they didn't save nearly enough money. I think half of Americans have, less than like 200, half of like baby boomers have less than like $200,000 in retirement savings. And there's probably, it's probably even less than that. And so, okay, great. You're getting like $4,000 a year of income.
And Tim, what we got to remember, they got to have to sell their assets in order to retire. How are they going to sell their? Who's going to buy all those assets that the baby boomers have, that the pension funds have?
And the bigger problem is the fact that all these unfunded liabilities, it's a Ponzi scheme, so they need to have more young blood coming in there, which is why there's a push to have all the immigrants. And actually, if you're an immigrant, like, you shouldn't even come here to America, because you're just going to be, putting a giant shackle on you. But they want to have, there's the birth death ratio. I forgot exactly what it's at. It's like 1.9, I think, but you need to have it at least 2.1 just to replace the ratio. And without even getting political, this is not a political statement, but you cannot mathematically have this Ponzi scheme entitlement system and abortion. It's just a mathematical equation, is that in this type of system you always need to have the other generation massively bigger than the other one, so that way they can prop up the entire system and keep things going. It's not a political statement. Okay, great. If you guys want to have your abortions, well, then fine. Then don't make me pay into your Ponzi scheme. I mean, is it, that much to ask for? That, if you want to kill your child, that I don't have to pay for it.
Yeah.
Now, obviously people could probably see, what side of, I was born to 19-year-old parents. So, I mean, people can probably see what side of the argument I stand on there, but it's just, it's a pure mathematical equation that you cannot have, generations underneath you supporting smaller generations, supporting bigger generations. And I think when Social Security started, you had like 64 people paying in for every person that was receiving benefits. And now, it's probably, 2 to 1. What happens when it's 1 to 1? What happens when it's, 1 to 2? I mean, this can't go on forever. Best case scenario is that, you still get paid your Social Security, you still get paid your pension, but the money doesn't mean anything. So great, you're a firefighter or policeman, you're getting $50,000 a year in retirement, but now we print a bunch of money and now your $50,000 buys you the equivalent of $2,000.
Yeah,
sorry.
Yeah, and also what we got to remember, Tim, if interest rates were to go up to save these pension funds, especially the government that around the world, the United States, would go bankrupt.
Well, the other thing,
fast.
Yes, I mean, they're damned if they do, damned if they don't. If the interest rates go up, what happens is the underlying bond acts like a teeter-totter. So let's say you have a 0% bond for 30 years and rates go up 1%, the underlying value of that bond would then decrease by 30%. Rates go up 2%, it would go down, slightly by more than 60. Even, and that's the same as if it's, 1%. So if you have a 10-year bond, rates go up 1%, the underlying value of your bond goes down by 10, goes up by 2%, goes down by a little bit over 20 if you have to liquidate. And so in this case of a negative interest rate bond, you're not even getting any money to cover your expenses. So of course you've got to liquidate. And most people aren't rich enough to just live off their interest because A, they don't have enough money, and B, the interest rate's like nothing. So even if they had a 10% interest rate, a lot of people probably couldn't even live off that anyways.
Just buy, Tim, here's the best pension advice for anybody. Buy a whole bunch of negative yielding debt. That's how you should retire, Tim. You could live off of the negative interest rate that you got to pay.
Yeah, and I do have to pick up my daughter soon, so I've got to leave in about 5 minutes. Yeah. But what I will want to say, because I did sort of tease that there is other things besides gold and silver, and one of the strategies that I started implementing right around this time last year, and I have videos that prove that it was right around this time last year, is and sort of this would be I think a great strategy to help election proof your portfolio. No matter where you are in the world. I am a financial advisor, so if you don't want to give us $1 here to there, one of the ways you can support us is becoming a client of myself. So this is a shameless pitch, but this is great, I think, information. And so one of the things that we're doing with our clients is that we're buying basically downside protection on a lot of these major averages. So if the stock market goes down, our clients' portfolios, we have a finite amount that they could possibly lose. So in many cases, it's let's say it's 5 to 8%, and that's assuming even gold and Bitcoin, everything else goes down to 0 too, which probably isn't. So if everything went down to 0, we could say, hey, we can quantitatively pinpoint what's the most you could lose. On the other hand, if the Fed, because I think the market's only going to go down, maybe 20, 30%, and then the Fed's going to have to print so much money that eventually on a long enough time horizon, the market's going to go stupid. And just like it did in Germany. If you were, if you wanted to be safe and keep all your money in gold marks in Germany, well, guess what? Eventually that collapsed, and then it collapsed, I think it was the Renmark, then that collapsed, then into the Reichsmark, then that collapsed into the Deutschmark, and then that got taken over by the euro, and now that's probably going to be unwound and go back to the Deutschmark or whatever. whatever. But if you want to be really, really safe and keep all your money in Deutschmarks or whatever the currency was of the day, basically you got wiped out 4 times in the span of like 20 years. But if you wanted to buy something like Mercedes-Benz stock in 1900, which they were around back then, the oldest car company in the world, that now your shares would just be priced in different currency units. So you were maybe still losing some of your purchasing power, but you still had an asset you're retaining versus just keeping money in the bank, keeping all your money. And, we have different strategies. So we have self-directed IRAs too, where people can do more advanced things with their retirement, like put a little bit of it into gold or crypto, maybe Airbnbs if that's your thing. And so I'm not saying I'm an expert in everything, but we allow you to become the expert in what you are the expert in. And then we also have some of the, and for people that don't want to dabble in the other stuff and they're more traditional, well, we have some, I think, great traditional strategies that will protect the downside. And what we saw, last October through December is I didn't have any clients call me up that were nervous or concerned because they saw their statements basically little to unaffected. Now, I should have just sold all my put options at the end of the last year, and that would have been the best thing to do. But what I do want to stress, if you don't know what a put option is, do not go out and try to do this yourself, because you can be on the wrong side of it really quickly if you don't know what you're doing. You don't always want to run this strategy because there is a drag in your portfolio, but I think we're in crazy times right now where basically I think the market is going to go down a little bit. Then the Fed's going to print so much money that eventually it's going to go back up. But, if you're 65 years old, you don't have, 2, 3, 4, 5, 6, 7, 10 years to wait. If you're if you're about to retire or just retired, you can't, go and wait unless you've got, a lot of money sitting on the sideline and you've got other strategies. And so I am a certified financial planner, this part educational, part pitch, but that is, I want to save you guys ahead of time. I don't want to be like, oh, well, I've had a couple videos that only like 50 people saw and, sorry, I didn't want to pitch and now you guys lost half your money, or you kept it in, or you lost half your purchasing power because you kept it in, a bank account and you're going broke safely. And which on the Federal Reserve's own website, you had the former vice chair of the Fed, Stanley Fischer, also I'll point out Israeli citizen, which, why is an Israeli citizen on the board of the vice chair of the Fed, which I would say that about any citizen of any country outside of America. But what is going on with that is he actually said in a 2014 speech in, I think it was either Sweden or Switzerland, I think it was in Sweden, where he said that we're going to issue bail-inable bonds, and that basically the next financial crisis is that we're going to basically take your money. And there's been rules and different money market stuff where basically it says that your money at the bank is basically an asset of the bank that they can use, in the event that they're not solvent anymore. Yeah. So
and they've been using it to invest in, terrible investments. Look at, the bets that Cyprus Larnaca and Cyprus Bank did, back in the day. They were betting on Greece banks to fail, and then they got bailed out, and then they were on the hook for all that money. And then, of course, they failed and got bailed in. And it didn't, today, people that think that, this deposit insurance is going to save them, please take a look at, because I heavily have gone into the biggest countries of Canada, Australia, and a little bit into the United States, looking at how much they actually have of money in these funds that are supposed to, insure the deposits under 100,000 euros, under $100,000, and so on. They don't have a lot of it. In Canada, they have 0.39% of that. And if one big bank goes afray here in Canada, it's going to be at least 5% of the deposits that's going to be on the hook here. And 0.39% is not going to cover 5% of the deposits. And of course, in Australia, they have the financial claims scheme, which is covering 20. Actually, the government is covering it there. They said that they're going to put in the case of a bank problem or bankruptcy in a bank. They're going to put in. The government is supposed to put in $20 billion. Infuse that into the banks. But the problem is the banks there have $60 to $900 billion on their deposits. How is that going to do any dent or save any, deposits? So all these schemes that are supposed to be insurance and protect the people that willingly have their money in the banks that they've given to the banks that is not theirs anymore. It's not your money anymore. And you are gonna, if you believe that and you think that banks are safe, you're gonna be in for a very what do you call it? You're just gonna be not very happy when this next financial crisis comes, because that is what's going to happen next, is the systemically, a failure of a lot of banks around the world. and with that, the whole monetary system will come and unravel, within it, because you cannot prop up this Ponzi scheme forever. And of course, for people that, I see a lot of great people are in the chat that are, of course, educated, that are been watching us for a while, and are smart people. They're talking about gold, silver, and crypto, and that is the solution. And the gold and silver is the wealth insurance. And for me, crypto is the bankster failure insurance, the bank failure insurance, because what happened with Bitcoin back in 2013 when they had the bail-in in Cyprus, everybody started using it because they had capital controls of 60 euros a day that came out to the individuals. Meanwhile, they could use freely Bitcoins if they actually managed to get their wealth over in that. And that way they were able to kind of keep the economy a little bit afloat, instead of
so they let you take out $22,000 a year is their limit. And I do see a lot of great comments in here, but we got one guy in here who's like, hey, this guy is so short-sighted talking about Mercedes stock. He has no idea what is coming down the pipeline with economics or climate. I said, if in the year 1900, which means is 119 years short-sighted. I'm giving an example off the top of my head of a company that was around in Germany in 1900. So, do you have a better one? The person that's out there with, these examples, that's crazy. And I was saying that in that example, I didn't say go out and buy Mercedes stock. I said, if you had did this in 1900, it would have been better than holding on to Goldmark, Renmark, Reichmark, currencies that all ended up collapsing.
Yeah, anything is better. Like anything, especially commodities, are way better than holding any currencies over time. If you hold a currency over 100 years, it's mostly have lost every single little bit of value that it had before. So people got to understand that, and that's not me just coming up with that. That's me looking at 300-400 different currencies throughout history. They always devalue over time, because the possibility to print currency out of thin air, or now it's just electronic digits out of thin air, they will misuse it. They will do it, and there's no doubt that they'll continue this until people are saying, this is enough. I can't afford anything anymore. Look at look at the Gilets Jaunes, Hong Kong, like everything.
When people have nothing, they have nothing to lose, and that's why I've got about 2 minutes, because I do have to go pick up my daughter, so I got a hard stop here. But somebody did. We got Path to Ruin says, what if they confiscate all the gold again? Well, then you got to make sure that they don't know where your gold's at. And then I also think that is less likely to happen, just because in 1933 we were still on a gold standard technically until
not a lot of people actually gave the gold in though. That's the thing as well. You got to remember that, and even they had this in Zimbabwe too, Tim, where they it was penalty by death or something in Zimbabwe if you use gold and silver. People didn't listen. They used gold and silver because nobody gives a shit about the government. When things hit the fan, people are hungry, they will do whatever it takes to,
That's why I'm glad I'm in Arizona and Josh is in, in Vegas, where heavy gun culture. Actually, gold and silver is actually legal tender here. And I went and actually was at the Capitol with Ron Paul trying to advocate for that. It happened to be International Women's Day. And then I had a whole big fracas where I basically caused over 100 women to leave. Just because of me, and there's actually a video of that somewhere that I live stream. And they broke my brand new iPhone. Very, very tolerant liberal leftists, which I was only there for the Ron Paul legalized gold and silver. But yeah, I think it's just easier this day and age for them to print a bunch of money. They didn't in 1933. They could have never envisioned what's going on today when they did that.
Yeah.
So
and they created the Exchange Stabilization Fund with that confiscated money.
Yeah, lots of different things that they could do, but I do have to. I got to pick my daughter up, or otherwise, and I'm gonna call from the school. Yeah. So I do have to.
Yeah, but it was a pleasure having all of you guys on. We're very happy to have all of you on, and continue to watch us. Me and Tim will try to do this, once a week. Try to get live stream, because I think there's going to be a lot to talk about in the coming months, Tim. So we gotta, give you the real insights here of what's happening, the insights and mechanics of the whole world economy, and try to make sense for you and help you, in a way so you could protect yourself a little bit better about what's actually coming down the line here.
Yeah, definitely. And then, make sure too that, we're going to try to see if we can have this standardized, that we'll do this Wednesdays at 6:00 Eastern time. If that ends up, working out is what we're going to try to shoot for. But, as things, dematerialize and get worse and worse and worse, check us out on those other platforms. I'm going to start using Instagram more. I'm still trying to figure that out, but we've got that going on. I mentioned Flow. I'm not using it as much, but I am trying to push that as well. BitChute for all the archiving, and different, and just text number 2 below. I've got my free ebook there, so not there to spam you guys. It's backup method of communication to be able to get the information out, because we can't basically Josh had 500 people unsubscribe the other day on his video about people that were unsubscribing, so it was sort of crazy. But I do have to go. Hard stop.
Yeah.
Definitely appreciate everybody that's out there for putting up with all the stuff that was going on with the live stream. It's not easy trying to do everything live and control the things yourself and shoot out to all these different places, and got 3 TVs and Zooms and all sorts of other stuff is crazy, but do appreciate it. It will keep getting better. I'm Picciott, and this is John Sneisen, and we're World Alternative Media. Find the truth, be the change.
Be the change.